The global sell-off intensifying this morning, led largely by tech. Want to bring in Dan Ives, managing director at Wedbush Securities. We're looking at the NASDAQ now off about 856 points. Of course, Apple, Nvidia, some of the big laggards. Dan, what do you make of the sell-off? It's a falling knife at the moment. Do you want to catch the knife?
Yeah, I mean, look, for us, we're navigating investors to this white knuckle moment in terms of looking at the tech names and the winners, what I believe is going to be this AI revolution. Look, there's no doubt that investors over the weekend and today calling, trying to say, is this the end? Is this the end of the tech bull market? I don't believe it is. I believe this is just a massive fear panic that will create the opportunities for Nvidia to own Apple, Microsoft, Amazon, Alphabet. And that's always been our playbook the last 24 years covering tech.
So when clients call you this morning, are you telling them to buy on this? We'll describe it as weakness, but boy, it feels like it's more than weakness.
Yeah, I mean, we've been basically, I'll say almost table pounding in terms of put the levels, put the names that you want to own that I believe are really going to view this as more of an opportunity rather than as sort of catching a falling knife. Because of where the growth is. You look at earnings, you look at the numbers. I mean, I'm here actually in Tokyo, and across Asia. The demand is here for AI. That is not leaving, despite what we're seeing with this Nikkei sell-off here in the global rout. That's what we're telling investors across the world today.
Dan, I want to put Apple up on the screen for a second because one of the pressure points, in addition to what's happened overnight, and then obviously the jobs number on Friday, was the disclosure that took place over the weekend, Saturday, that Warren Buffett has now officially halved his stake in Apple. He's still the largest shareholder in the company. He's been trying to, it looks like, raise cash. He's obviously sold out of other stocks, too, which I think is also weighing on the psyche of the market this morning. But you look, this stock now off 7%. What do you think is behind that sale?
Yeah, look, Buffett was selling a little in 1Q, right? Now, granted, the 50% sale, I mean, that was eye-popping relative, and I think caught everyone's attention. It's going to add to pressure here. It still is number one holding. He is a huge supporter of Cupertino, number one holding, almost double of B of A. Andrew, our view is, if you look at this last quarter for Apple, you look at the guidance, you look at what I view as 270 million iPhones in a window of an upgrade opportunity, an AI-driven upgrade cycle ahead of us. That's reasons to own Apple, not sell it. Now, look, when Buffett talks, everyone listens, no doubt, for good reason. But this is not the time to sell Apple, despite some of the nervousness here. I think this is an opportunity, especially going in to what I view as really a historic upgrade cycle for Apple.
We were talking to Tom Lee earlier in a sort of macro way about just how things are headed and what may happen over the next month or two. His sense was you're never going to, I don't know, never. It might be hard to get real stability until October, so that even if you think the market rips in the next couple of days after falling, that it's very hard in the month of August and historically September before you actually know whether you have your sea legs or not come October.
Yeah, look, I mean, I think Tom obviously has great words of wisdom. It is going to be a buckle the seatbelt moment, over the coming months, especially even also going into the election. But if you look at the fundamentals in tech and a soft landing and a Fed cutting environment, I mean, that's the time to own tech. And I get it. The Bears have won over the last week or two, right, after being in hibernation mode the last 18 months. And I get it. But if you look at quality tech, large cap tech, into an AI, what I view as a once in a 40-year cycle, those are names you own here. And I think, that's why we're out here hand-holding through this white knuckle period, not the time to head for the elevators.
Dan, this is, the earnings that we saw, sometimes people nitpick, but in general, pretty good for the Mag 7 across the board. So what we're seeing now is probably just some air coming out of the enthusiasm, maybe some multiple contracts a little. What happens if it's a negative feedback loop and actually things start softening up and you actually do get, not just the multiple side of things, but the earnings side of things? Isn't that, I mean, we're down 10% already in the NASDAQ. Where could that bottom?
Yeah, like the self-fulfilling prophecy. I think the worries there, right now unfounded, right? In terms of not just what we saw from earnings, but in terms of what I see, here in Asia, in terms of our checks demand going into the rest of the year and into 2025. Look, that will be sort of a ghost that I think the street will be battling in terms of what could come around the corner. But if you look at the fundamentals here, I mean, they are strong for tech. Balance sheets are strong. And again, it goes into a once in a 40-year type of cycle in terms of spending for AI. Look, there's going to be losers in this. Look at Intel. I mean, if that was obviously a disaster and some others. But in terms of quality tech, big cap tech, in terms of software semis, those are names you own here. And you don't sell them despite, obviously, a lot of nerves that are going to be going on across the globe today.